London-based property company Capital & Counties has approximately 30% of its investors based in South Africa, and touching base frequently with these investors is a crucial part of the company's strategy, according to Ian Hawksworth, who's the Chief Executive of Capital & Counties. He joins us now live in studio to discuss the business and its plans moving forward. Ian, good to have you in studio. Thanks so much for joining us. So, as I said, you're here touching base with your South African investor base. You've only just arrived, but what kind of sense are you getting from the investment community here, and are you having to calm nerves regarding the state of the economy, your operations within it over in Europe, despite what seemed like a pretty stellar set of numbers that you released last month?
Well, we're listed here and listed in London. As you say, about 30% of the shareholder base is South African. I think we offer a very interesting option for South African investors to access London real estate. We've done very well over the last 3 years. We've doubled the size of the company. The market cap now is in the order of £2 billion, about 27 billion rand. We specialise really in retail and residential property in central London. The London economy is great. GDP growth in London tends to track global growth rather than UK growth. So London's on the up. It's a very important place for global investment, and demand for residential and retail is great.
Let's drill down into the demand that you're seeing right now, and if there's any distinction to be made between the residential and the retail space.
Well, we concentrate on district developments. We have two very big developments. Covent Garden, which is the historic heart of central London, wonderful place to shop, eat and live. And we have a large planned development at Earl's Court, which is on the edge of Chelsea, which is the largest development in London, about 7,500 to 8,000 new homes.
Yeah, taking a look at how you're managing those investments right now. I mean, you've done a lot of capital recycling. That's a phrase that was used, very emphatically in your results report. I mean, run us through that strategy. What exactly we're looking at there?
Well, we're looking to make money. I mean, for us, the most important thing is return on equity.
Shareholders would be happy to hear that.
I hope so, and I think those that have been with us the last 3 years, have received 150% total shareholder return, and we think there's good growth to come. But effectively, we're looking to ensure that we invest our capital wisely and take profits at the optimum time.
Taking a look at that investment, I mean, you're sitting at this stage with a pretty conservative gearing ratios. Are you looking to leverage off that a little bit more moving forward? Well,
the key for us is the organic growth that can come through from the underlying assets. So we anticipate good growth from both Covent Garden as it emerges as the best place to shop and live in central London, and tremendous opportunity with the Earl's Court address. I think it will be one of the best locations for private residential in the capital. I think as time emerges, we will see the ability to invest the capital that we have. We've got £400 million of available cash and facilities. As that gets invested, the gearing obviously increases to a modest 20 to 25%.
Okay, taking a look at the kind of rises you've seen in your current property values, I mean, it's been pretty phenomenal. You've seen the company's total property value increasing by 15% over the period, the year that was. If you take us through your investment strategy moving forward, what's catching your attention in terms of investments?
Well, more of the same. Covent Garden is about creating the best retail district in London. There's tremendous demand from both domestic and international retailers, and that's translating into very significant increases in rent. So we've grown that estate in the last 3 years from 500 or so million to nearly £1 billion. So we'll continue to do more of the same. We'll buy more properties. We'll attract some great new tenants. Only this week I was in New York. We've just secured a brand called Shake Shack from New York. Chanel have opened. Opening Ceremony, which is a very cool outfit from New York, is also open. So it's becoming the cool, trendy place to be. On the residential side, realistically, you can't be in a better sector than high-quality residential in central London at the moment. We've got 7,500 potential new homes right on the edge of some of the most expensive development in London. So I think both of those estates will do well.
And anything making you nervous about the road ahead?
Well, the global situation is still uncertain. I think you'll have touched on this a number of times in your programme. So one of the benefits of having a strong capital structure is that you're able to withstand any external shocks that might transpire. But I think at the moment London is set fair as one of the best cities in the world.